So this is going to be the trade breakdown of two trades, right? And these ones, they're going to be very, very good, right? This is the first one's going to reiterate your open high, low close, and the second one, the market maker sell model. Well, sell model and buy model, right? Now, this is also a market maker sell model. Now, you see right here, if I just put that back, right? Long dollar. Now, look at this, right? We trade down lower and you see the displacement. Now, if you watched the weekly commentary or you just jumped into this, you know in the weekly commentary, we just reiterated the idea of market structure shifts. But we need displacement. You don't want to see something like this, right? Lower low, and then look at this little measly candle. We don't care about that. This punch above the high, that's what you want, right? And you see, I go long dollar, right? You see all the way over here, right? You're just accumulating, going pretty much sideways here, trend line, and that's how I told you guys, look out for a market maker buy model. If you see an accumulation and the trend line kept intact, and you're hitting into a PD array or running a pool of liquidity, and you get that displacement market structure shift, it is prime time market maker buy model, right? Now look, this candle's high, this candle's low. We had a level of imbalance. Now, I know these big imbalances may put you off. I totally understand that, right? Break a block, cut through with a fair value gap. Now, if I just, I'm pretty sure I do, yeah, minus BB. Now, this is your chapter 6 lesson 1, and this is it, doing it in lifetime and fruition. And by the way, there was one of you that asked, why am I taking replay trades? This replay is blue. This, right, this doesn't mean it's replay mode. If you want, if you have a doubt, go in your replay mode in real time and do it as the candles. Put your replay back and play it. You'll see your replay doesn't look like this. This is off. It's just I didn't get off the replay mode. If you're wondering why am I in replay mode, I use replay mode to cut the candles, to take screenshots, to make your guys PowerPoint slides for the lessons that I make for you guys, right? Just to brush that. Now, chapter 6, lesson 1, we spoke about offsetting buy and sell programs. Break a block, fair value gap, candles high. Run it, break a block, fair value gap, and the candle's high. Now we wick away from it. The next candle we expect to trade lower. So you can enter on the open of the next candle. This is what I wait for. You see how I didn't take that trade into the breaker? You see how I wait for the candles close, right? Now I was favoring a open high low close, right? And remember, one of the things that we said about open high low close is that the previous candle's high shouldn't get touched. Now this was still, it could have been a bit more of a riskier trade in terms of stop loss, but take these 10 times 2R 3R trade, you'll be fine, right? At the end of the day, it's about managing risk over a large enough sample size, and I've done this for some time and I know that this is what works for me. So I put my stop loss above the previous candle's high, and I target, under this sell side liquidity pool, right? Now, this is the interesting part. Sell stop beneath pending bearish order blocks. Now, I've touched and teased upon using the idea of sell stops, and if we're thinking sell stops and buy stops, I thought that's the, pairing of liquidity. Yes, but we can use them in our favor. Now, hear this. When we're expecting lower prices, especially in a market maker sell model, you see when we push up higher, right? I want you guys to realize this, what I'm going to say. When we trade up into a PD array, we expect swing points to be made off of PD arrays and runs on highs, right? This is now a rejection block. You see how this is up candles, or the rejection block, remember, it's only the wick. And this is an order block, right? We fade up candles in sell programs. When we're, seeing we ran, and this is a run on buy side liquidity, right? Above here, this is a run on buy side liquidity, the smart money reversal, and that displacement, right? You see that displacement breaks the low. It's not that, that measly little, you know, just small candle wicking it. No, it's one big candle, right? Break a block, fair value gap. Now, you're going to see, when you see a rejection block, this is a bearish rejection block being made, and we have an order block here now. You're expecting the range to unwind. Because remember, if you look at the PWA matrix, you have rejection block, order block. There's going to be a fair value gap here, right? And there's going to be, the mitigation block to the left of it. So we know that, we're in for sells. Now, this up candle, I'm anticipating price to break through that, right? Now, some people will wait for the break of it and then the retracement back to it and then move lower. But if you're saying that once we break this, it can go back to, the candle and then trade lower, it doesn't always come back to it. And a lot of times you get what you guys call being front ran, where you just miss the trade, it runs off without you. So why not just place a sell stop there, mimicking that idea that it's going to break and retest it, and just put your stop loss where you would put your stop loss normally. And that's exactly what we do, right? So let's watch it together. And this is how I like to pyramid trades, by the way, right? I'll have one and I'll place sell stop beneath, what I call a, fading up candles, because this is what I expect to be a bearish order block, right? So I put sell stop there because I believe we break through that, we shouldn't break above it again, right? Because, we're in a market maker saw model. Until this pool of liquidity is touched, I'm not expecting none of these to get traded through, right? Remember, your program ends. The buy and sell program ends when liquidity is breached. When you trade through a low, that's it, cut it. That's why we don't hold for crazy risk rewards as well. So I just make a statement saying when that's activated, I'm going to reduce the first stop loss, right, to the sell stop loss. So I'm just going to change this, shave the risk off from here to here, right? Just, standard trade management. And that's our target, those relatively equal highs, right? I'll just go back a bit. You see how I'm pairing it all with the dollar. When the dollar runs that, I'm done with euro. Now that's the sell stop activated right there, and you see how I managed it. I'm reducing it, right? And I tell you guys that's an open, high, low, close entry right there. Now it's displacing away, right? You see how we said it? You see what we said? Remember? Rejection block, order block, and we're seeing the range unwind, and we expect there to be fair value gap here because that's how the PDA matrix is formed, right? I say that's a buy program by the algorithm pending because it's an open high low. For the DXY is open low high close. Now we see how we had that fair value gap there. That's good. That's we're on side. Now we mark that fair value gap out. Now I could have pyramided back there, but I'm already in on the sell stop, right? That's something for re-entry to consider. That's a sell stop liquidity. That's a fair value gap on standby, but I won't engage because we're already on the sell stop, right? Now this is, if you missed that, if you missed, that move into the fair value gap, this could be your entry here. This could be your model. Let me just pause that for a second, actually. You see, this is probably, the safer trade to take. You see, let something like that go. Get the second one, right? Because given that this liquidity pool is still intact, yeah, we haven't touched it. We displace lower. You know that this is the drawn liquidity and we have a fair value gap. You can enter on here with your stop loss above this candle's high, right? And then you would have to target a large liquidity pool, to manage out the your risk management. Nonetheless, though, this is a safe trade to take. Now you're inside that. You can short anywhere in there is a short. Anywhere in this candle is a short, right? Don't try to be like too precise. Anywhere in that candle, and I say it here, you could short this candle right now, and you see it's the other candle hasn't formed yet, and I'm saying you can short this candle right here, right? We're inside that order block now. That's a little drawdown. Drawdown is it's not a problem, right? Consistent stop loss is a problem. Now you see how this was overshot a little bit, and the DXY now was in this order block and fair value gap. Now we expect an expansion away from it. I was eyeing up. I remember just looking at. I was eyeing up this 800 level, that big figure 800. That's why I put the I there as well, by the way. That doesn't bother me, right? I don't really mind that that can happen. That's just like a 1 minute candle probably coming up to rebalance a volume imbalance or something. Again, anywhere in this fair value gap is a short opportunity, right? We're expecting expansion on the dollar, so there's still plenty of room to run for thingy. In saying that, if you're still expecting a big expansion, and hear this right, and this is going to be the brutal truth. If anything, remove the take profit, keep the stop loss, and manually manage it. If you're anticipating a bigger run, now I'm not saying remove your stop loss, I mean remove your take profit if you're just for the sake of it in every single trade. No. You see, if I just you see here, we're targeting these buy stops up here, and we have this high as well to run, right? And even this high to run as well. You see how much expansion we have on the DXY? How much expansion do you think we have on EU then, right? So we could probably rinse a bit more of a take profit. That's something to consider. But just know when to close. That's the thing, right? If anything, take the take profit. Your predetermined take profit means you're fine, and that's the take profit here. Now you look, that's the rundown I'm talking about, right? Um, I don't think it's gonna catch the final run of it, but you're gonna see, yeah, look, it's just running up higher, right? It runs pretty much lower that day around this level here. This was way traded through, right? That's just the first one. Now that's one example, right? And remember, take note of that sell stop use. Demo it, practice it, see it in real time. What I want you guys to see is this: if you see a market maker sell model or power three, and you see that you're clearly rebalancing bearish fair value gaps, and you have an up candle there, think about have a sell stop there with your stop loss above that candle, and trade through it. Because remember, we're using retail's idea of them, and we're fading it to our own. They believe in strength above highs and weak beneath lows. We don't believe that. We believe in a sell program when we're offering bearish prices. Up candles get traded through, right? The lows of up candles get traded through. So let's put a sell stop there because that's what we believe. The algorithm's gonna hunt that. That's our weakness. So that's just how you can use a stop loss. I mean a sell stop, not stop loss, in that regards, right? Uh, then we have another one. Now look at here. I want to see displacement through here. Now look, I want to see displacement through this order block and through this low, right? Not this low, because look, this was a fair value gap. Just imagine that fair value gap lined up from this candle's high to this candle's low, right? We rebalance that. This is a rejection block as well. If you scale it down to a 1 minute, it's going to be a rejection block. I want to see displacement through that fair value gap, showing breaking this candle's low and disrespecting this, previous old fair value gap, and then I'm going to be entertained. Until then, it's either it doesn't happen and I'll just, I won't have anything that day, and that's fine. I don't have to press a button, right? But for me to entertain anything short, and by the way, if you're asking what this is, mark this level out as well on a 4 hour chart. If you go to the DXY, I believe it was Wednesday on the 4 hour time frame. There was an order block, a bearish order block on the DXY on the Wednesday of the week that just went. This is the price to kind of, if you want to line it up around, you know, I'll call that 47, you know, 470, 480, and to around, the 650-ish. So right here, you're just anticipating now. You're not getting excited. You're not doing nothing. You're trying to be as objective as possible. You're waiting for displacement. You see how it's a market maker sell model, right? Like, you have your accumulation. Now you're having that, that leg up, accumulate, leg up into your PD array. And you're hunting this at the PD array. Because if I see this and we're going up into a PD array, and this was inside of quite what was a end of the week was like a consolidation actually. You see how I can still frame this on a 5 minute time frame using a 4 hour PD array, right? Now that's the displacement. Now it's go time, right? We got the displacement for our PD array. And remember the DXY, we're favoring lower prices overall on the DXY as well. Remember that, right? To that weekly low. Now we got the displacement and we're trading through this fair value gap and this low is broken. Now what we do is this. We're waiting for retracement now. You see how it's gone straight through that old fair value gap? Now, I say from here it could take 15 to 30 minutes to find an entry. That was me anticipating it's going to be a bit slow because the day was quite slow, but the displacement was quite fast. The reason I said 15 to 30, each candle's 5 minutes. I was expecting, 3 to 5-ish candles to come and, offer this fair value gap and then, move down lower, but it happened a lot faster than that. Now here, I'm, you know, I'm waiting for this fair value gap because the reason being is this. If I cut through here to the left, let's cut through here to the left. Nothing. High, lower, low, higher, high. This is your breaker block, right? I'm considering these wicks. Cut to the left, cut to the right with it. That's the fair value gap. I'm always pairing. You see how in the last video as well, I paired fair value gap with the breaker. Now, if I just go back a bit there. Right, you see how I'm using the 3 minute as well. I know 3 minute is clear, just one fair value gap. Anything in here is a trade opportunity. I think I was a bit more back. I'll show the DXY. I'm looking to get into this area here. You see this inefficient, it's just a dodgy candle, right? I'm trying to get into there. That's what I was waiting for to pair up with the Euro USD, right? Go back a tiny bit. You see here, right? High to low, that fair value gap, trying to get into there, right? That's what we're trying to get into. This is why I recommend a multi screen monitor for, if it saves freaking through these time frames. Now, this is what I'm doing now. I'm waiting for the close of that candle. I'm always monitoring the close of the close of the candle. You see this? This is your best friend to know when the close of the candle is coming. You see right here how I had the tool ready. The close of that candle, I'm favoring, the expansion away from it. As soon as that candle, closes, enter, right? And you see it, that's what I think they call a sniper entry. Now, the stop loss goes beneath here, right? I don't want to be in the trade if we go beneath there, because if we go beneath there, it's probably going to be sideways for the rest of the day, or it's going to go for the sell side liquidity pool. No reason for price to trade through there, right? Rebalance doesn't make sense. And this is going to be the London close macro, and we're going to talk about that. This is probably going to be a bit longer than the weekly commentary itself. See how I'm always flicking through the DXY to pair the runs on the lows with the highs on the euro. Now that's ticked off, right? We're still watching it, right? We're still watching the run. And it's gonna run heavy. Now I said 345 to 415. The run that happened earlier, like it's gonna happen. I was expecting that run to happen here around this time. And you can see it with the clear draws on liquidity, all right? Now that's the expansion, and let's just read this together. These guys here, right? You see this clear trend line, right? It's too clean, right? And it's inside of, I want you to pay attention, 5 to 7 is your lunch period. Now this is the London close macro. Inside of London close kill zone, when there is a move into a PD rate, it's all given that you're trading into a level of price. It's not just, oh yeah, now Omar said that it's gonna happen every single. No, it's specific context and parameters for this. Remember, it's when time meets price, right? Given you're in London close, right, or the end of New York, which is the start of London close, and you trade into a PD rate, you saw on the DXY we traded into a premium order block and we displaced away from it. Now that's going to offset the algorithm to reprice. Now we're using a reference to time, right? We're using a reference to time and we're looking at the liquidity within that time, just like, data ranges. We don't just pick any high, we're framing the 20, 40, 60 days, right? Now, on the intraday level, when you get this for London close, you get that move away from PD area displacement in London close. London lunch, guys, that is the liquidity you're looking to seek. Those sitting ducks that were there in London lunch, and it's very clear, especially when you have something like this, a clear trend line, when you have equal highs or lows, those guys are your targets. That's the macro. It's going to run trailed stop losses. All these guys here, short, right? They're short here, new low, trailed stop, child stop, child stop, child stop. It's gonna go and it's gonna take those out because the algorithm seeks liquidity. It's going to reprice to where liquidity rests. Now it hit off of a premium order block you know, on the DXY and it had a 5 minute bearish displacement. It's gonna seek DXY sell stops, which is Euro buy stops. These guys here. That fair value gap. Now, why did I pick this fair value gap? I'm monitoring this on another screen as well. On my phone, I'm monitoring this, right? This is a 5 minute gap. This fair value gap here, not this one. This one lines up with a 5 minute fair value gap, and I think I'll show it as well. Just zoom out a bit. Now we're inside here. Now you're gonna see we go a bit back and forth, and I want to touch on this as well. Here I thought maybe we get the expansion, but we're still not in that deep into that 5 minute fair value gap. Like it's not there yet. And the reason I didn't want to pyramid this is because the stop loss I would want to put it, around here, or the stop loss I just couldn't decide one, so I just didn't pyramid that one like the one before. Now here, right? This this is inside of a 5 minute fair value gap, and I'll try look right here, 5 minute DXY fair value gap. Yeah, you see that run lower on euro, right? The 1 minute we got that candle down lower. Now we're in prime shorts again for the DXY. Remember, every single move back to fair value gap is another entry, right? Now you saw how I ticked that off. And you see how there's a fair value gap here on Euro 5 minute. You can't see that on the 1 minute, right? So remember that. Flick through the 5 minute time frame. I love to use the 5 minute time frame, even when I'm on a 3 minute, 2 minute, because it's very easy to get lost on that 1 minute time frame, 3 minute time frame. Refer back to your 5 and even 15 minute time frame to kind of understand, the 1 minute, is it, actually like reversing on me or is it just retracing, right? Now here, this is a power of three right here. Little accumulation, double top, that's the manipulation. When that is inside of a fair value gap, and that's, a 5 minute fair value gap, you're going to expect a large kick, an expansion, right? And I say here, this is a power three right here. It's inside the 5 minute fair value gap, which I was monitoring on the phone, and I'm expecting a pump from here. Now you're going to see the pump because when we retrace back into the fair value gap and we run that short-term low, it's going to offset a open low high close delivery. And now the blue lines are delineating the lunch, right, from 5 to 7, right, and we're working within these liquidity pools to target. You'll see it's going to come straight up for that. These guys, it's going to go straight for them. Just that's just me tooting the horn a bit. I have my eye on that mid figure as well. You see how that high right here, if you take it across, it's very, very close to the mid figure, 8,500. Notice how I always use, right, when we're expanding away, how I always use those fair value gap fills to consider another entry, or if I did miss that, I'm using a fair value gap fill to place the trade. That's what I want you guys to start noticing and doing as well. Especially if you compare it up with a block, right? You see here mitigation block, right? And there's a fair value gap around here. They don't always have to be together. If there's a fair value gap here and just a bit under it, possibly you shoot the fair value gap a bit and you wick into that, that block. Always pair fair value gap with a block all the time. You see, I've done that in both videos. And yeah, that's the guys tagged, right? And that's the end of that video. So I'll try to do more of these. I hope that helps. Remember, it's not just every London closed kill zone from 10 to 12, right? It's if it hits late New York into a PD array, you have displacement, you're gonna hunt, the run on London lunch liquidity. So that's gonna be it for this video. And until next time, and I'll see you guys in the next video.